All right, guys, it's Paul Singh. Paul Singh with the weekly swing trade report from Bulls on Wall Street. These normally come out on the weekend. We're doing it Monday today. Let's get to it. Let's talk about SPY. Then we're going to talk about earnings. And we're going to talk a little bit about the biotech industry as well. Look at SPY here. We've been talking about this in the weekly swings and the stocks and coffee that we do twice a week, and in the swing trade report for our members. But for a while now, we've been talking about the topping pattern, and we were watching closely because we are seeing signs that maybe we're going to break out of this topping pattern, and this could be a low. So until recently here, the hallmarks of a topping pattern were in. Not only did we get the top, we started the continuation down. And as the continuation down started, we saw what we see in bear markets. That is, the highs were lower than the previous highs, and the lows were lower than the previous lows. We have lower low, lower low, lower low, and then a lower high, lower high, lower high. That is a trend. But what we are seeing now is that trend might be breaking. We have what we're confirming as a higher low now. This pivot right here makes us a higher low. And for the first time, actually today on Monday, we might be ready to make a higher high. It needs to get a little bit higher here. And for a second, it looked like it was making it. But this is the range right here we're watching. You know, we broke through one important key range, which was the 50-day moving average. We got another key development that the 50-day moving average is starting to curl upwards, so no longer in that downtrend. Could turn very quickly, but if we start to see it pointing up here like the 9 EMA is doing, that would be very good. If we can make a higher high here, that definitely breaks the topping pattern trend. And then if we get up over the 200-day moving average, that's obviously the best thing that could happen here. Then we would have one more thing, and that would be to break this range here, and we would essentially be back on this long-term uptrend. So that's what we're watching for now. Essentially, we've got two major developments. That's the 50-day moving average break, and now this range here. So very good for the market. That's SPY. Now the Qs, more tech-heavy, actually have already done it and have done it for a few days now, in the sense that we got the higher lows here, and we broke the higher high like 4 days ago. So even more healthy in tech, and that's always a good thing. And then IWM here, same thing. And we've made a higher high in small caps as well. So the fact that tech and small caps are leading in these patterns is a good thing for the overall market. So trends are nice. We're breaking these topping patterns, or not breaking them yet, but we're taking the first steps to breaking topping patterns. Market breadth is also very strong. That T2108 indicator we watch is very strong. This is stocks above their 40-day moving averages, and look at that. We are making highs in this, so very strong in terms of market breadth. We'd be concerned if T2108 was down here, but it's not. It's actually very strong. So a good market breadth indicator. Another very good indicator is that we've had a good earnings season. So across the board, from the big techs, from some of the legacy type companies, from the growth companies, from all these different areas, we've seen a lot of breakouts. Here's a earnings list that I'm keeping for this quarter. And I could put a lot more stocks in here. I've been very selective on which ones I pick. I've already got 32 on. I could have about 60 if I wanted. But this list is very strong, and you see a lot of different types of stocks. You see the Apples, you see the Amazons. Amazon had a big earnings breakout. You see right here. You see Apple had an earnings breakout here. And then you have some of the growth stocks. We're going to talk about some of these today. Camping World, breakout. PayPal, breakout. Yelp, breakout. So Roku here, which was really beaten down, and now it is very strong. So we see really good earnings. Part of it might be that they adjusted lower, so it was easier to break. But regardless, the price action has been good, and that's what we care about. So market breadth-wise, we've seen good earnings. We've got improved patterns, and T2108 is strong. Now, we have news events seemingly always around the corner. We've got more inflation data this week. We'll see how the market reacts to that. So far, market has been reacting good to both good and bad news. So that's something to pay attention to as well. How does the market react to news events? And so far has been reacting good, or if it does decline, declines very quickly and then breaks out of it. So for instance, Friday, there was some concern about the jobs report actually being too strong, because then inflation probably grows and then the Fed has to keep raising rates. But today, market doesn't care. So good reactions to news events as well. So really strong market right now. Let's go over a few stocks. We talked about a few of these already, but let's take a look at them. CWH, these are all stocks that broke out on earnings and we're watching for potential trades. We have CWH here, breakout, now a consolidation. We are waiting for the remount of the 200-day moving average. If it does that, we could potentially see a run to the highs around 45. So an entry here, maybe around 31, 32. And we could target all the way up here around 45 and maybe risk 3 or 4 points. Really good risk reward here, to get about 15 points on 3 points of risk. We're looking at 5 to 1 there. Netflix, which we are in right now. We took profits in our biotech position on Friday, and it's actually strong today as well. We do have Netflix, but if you see here, really beaten down. And that's one of the themes here, that these beaten down stocks are now improving and may have bottomed. And we're seeing that in Netflix. Netflix had good earnings. And we're in this one, but if you're not in it, what I would be watching very closely is, can it pull into the gap here? And essentially then move past where it gapped down to last earnings season. So that's going to be a key level here. We'll say right around 250, we'll say 253 on this. If you can get into the 252, 253 range, then you can place a stop under that range and then target all the way up here to the gap fill around 331. So you're looking at a really good risk reward if it can do that. And Netflix is one of the leading stocks today, up almost 5%. So definitely a possibility this week that we pull into the gap there. PayPal, which has been really crushed as well, looks like a bottoming formation, and now looks like it's breaking out of that bottoming formation on earnings. You can see here, broke out of it on this big earnings breakout. Now it's consolidated, looks ready to make its next run here, and the target could be here right around the 200-day moving average. So a good 25 points or so on PayPal. Now let's get to some of the growth stocks. Here's DEC, really low floater, around 25 million. And you can see here, this is a very common theme in these growth stocks. The big beat down here for DEC, it was from 440 all the way down to 211, so it got cut 50%, and now has made a nice rebound. Broke out on earnings right around the 200-day moving average, and is now pulling away from that 200-day moving average. Even you don't have to go back to the top here. Even if we were to just get, say, to this range here, that's a good 70 points away here, maybe on 10 points of risk. So we're looking at like 7 to 1 here. Spotify, very similar pattern here. Breakout on earnings, pulled back to the 9 EMA, and now is breaking the recent high here. And we could target this high here, which would correspond very closely to the 200-day moving average. So we're looking at about 40 points on, maybe we would risk 5 on this. So really strong risk reward here, about 8 to 1. Lyft and Uber, we'll just look at Lyft here. Both of them broke out on earnings, have made really nice runs. Maybe a little extended here if it can consolidate right under this gap fill or this gap range, and then break into the maybe 2250 area. We could target up here around 30. We'll just pull up Uber because Uber is going to be a similar pattern here. For Uber, I would watch the remount of the 200-day moving average. And then finally, let's look at the big guy, Amazon here. Amazon has been crushed over the last year, had an all-time high here around 188, went all the way down to 100, and is now sitting right under the 200-day moving average, and has tested a few times and failed. So maybe this time would be the point where it breaks out. We've got the earnings breakout, so that's good. We've made a higher low. And now let's watch for a remount of the 200-day moving average, maybe around 146, 147. And we could target this range here around 170. So let's say 20, 25 points. And if we were entering around 147, maybe we risk 4 points. So again, we're looking at really good risk rewards on some of these potential trades. So, and we've got a lot more earnings here that we could be watching. Those 7 are 7 of my favorites. Now let's look at the biotech industry. Biotech has been very strong, bottoming formation, breaking out. We just traded it. We're out of it now, but looking to get back in. Here's IBB, one of the ETFs, more focused on the big pharma, and then XBI, more focused on smaller cap companies. And we can see here, again, remounting the 200-day moving average. They're looking ready for the next move higher. We've got a bunch of biotech stocks we're tracking. One of the easy things to do is just trade the ETFs like XBI or one of the leveraged ones like LABU. You'll get a little extra volatility. And then you don't have to worry about some of the stocks, which, as anybody who's traded biotech knows, news can come out of nowhere. So you're a little safer with the ETFs. But a few of my favorites here with the stocks. Edit here, very similar to the ETFs, about to remount the 200-day moving average. We have Beam here, which is already remounted and consolidating, but a very similar pattern. And then a relative strength leader in biotech or healthcare, health information has been Vive. And this one is a similar pattern as well. And we got a bunch of other ones we're tracking here as well. All right, guys, that's a weekly swing report. Remember, you can always join the Bulls on Wall Street swing service. You can go on Bulls on Wall Street, go to part-time swing trading. Otherwise, I will see you next week, either with a weekly swing. We're also due for live stocks and coffee. I'm not sure if I'm going to do it this week or next week, but you'll get an email if you're on the email list.